And good morning and welcome to VSA Capital 5 Minute Morning Miner on a sunny June the 15th, Thursday, coming up at the end of the week. And we've got Ollie this morning. Morning, Ollie. How are you?
Yeah, very well, thanks. How are you doing?
Yeah, it's all pretty good. I think both of us were playing squash last night and both of us found it rather hot, didn't we?
Yeah, the ball's a bit bouncy. The rally's going on far too long.
Right. Mine went on for 50 minutes, but I managed to scrape a 3-2 win.
I didn't win, unfortunately.
Sorry, I couldn't resist that.
Right,
quick. Let's turn to mining. Actually, there's a lot of news out in the markets today. They do seem to have revved up to life. Probably the big news in mining, of course, is that WE Soda has pulled its IPO, which will be a huge disappointment to a lot of bankers around town. And again, just shows you the state at the moment of the UK market. But there is still activity. There's still a few placings going on. But anyway, in mining news, what would you like to kick off with, Ollie?
Well, just on that WE Soda, quite a tricky area in tough markets. Obviously, soda ash isn't an area that people are that familiar with, even who are specialists in mining. And London probably a tough ask to get familiar with it, as one of the big growth areas for that is lithium, which London institutions have really missed the boat on so far. So hard to persuade them that this commodity was the right thing to be buying at the moment, probably.
Yeah, it's interesting on lithium. I mean, look, Australia and Canada really got it. We had a real spike up. It came down. We did spot that absolutely correctly here at VSA. My view is, look, lithium actually is a long-term game. It'll go on for like 100 years. So don't let a few months put you off. There will be another wave of significant performance by lithium stocks coming up. It's not quite yet. It won't be over the summer, so you don't need to rush. But when we next say buy lithium stocks, bloody well listen to us, because we'll be right. Right, what else, Ollie?
Well, two announcements from Charac Gold, their full year results, and in the context of those, the CFO who left early this year, leaving a place for interim CEO, that interim CFO has now gone up to full time, and the chief operating officer has also left. So they produced 62.8 thousand ounces of gold, which was marginally ahead of guidance of 56 to 62,000 ounces. That included a slightly higher proportion of own ore compared to third party tolling, but largely it was flat year on year. In terms of revenue at $92.3 million, but the costs increased. EBITDA was down by 52% to $6.5 million. The loss after tax was $5 million wider, and cash was drawn down from 11.1 million to 0.6 million. So they've highlighted that they're going to need to do some fundraising in the coming months. That loss really caused by quite chunky SG&A numbers, and also finance costs, which have clearly gone up while gold prices have been relatively flat year on year, as the AISC, which the company attributes to sort of FX moves, increased from 1205 to 1376, which, with gold price of 1950 or wherever we are today, still leaves a reasonable margin, but that shows you how significant those extra financing costs were for this company.
Yeah, it's a problem, of course, the whole mining industry had, but we're pretty much, I mean, if you look at a lot of indicators, as you say, Brent at 73, gas is back down to normal sort of levels. Most of the things have come back to normal, and yet, we still have a pretty high gold price at 1930. Some of these mining companies actually going to start looking actually very attractive. About a week ago, we did a special for Camel with Nigel Robinson, which I recorded and we put out, below £2, it's yielding about 10%. Actually in the current environment, they're probably doing pretty okay. I don't want to overly talk them, but I am still thinking about buying some of them personally.
Oh yeah, I mean, but that's sort of totally different. I mean, this company's been caught out by rising finance costs, whereas Camel, in the nick of time, paid off its entire debt load and is now debt free and can, well, obviously we're keen for them to make an acquisition, but they can really make an informed choice as to how much leverage they take on to do that in the current financing environment.
Anyway, it's a good excuse to just talk about Camel again, really. Right, anything else, Ollie?
Well, I mean, just on the gold price, obviously, last night was the first pause by the Fed on rate hikes. What was a surprise to the market was saying that there were going to be 2 more quarter point rises this year rather than just the one, and indicating that the sort of period of higher rates has to go on for longer. So that's why I think you're seeing gold dropping down slightly overnight. But I think we might get it. I think that might probably means that gold may struggle in the near term and is always a bit subdued over the summer months. But still, the sort of medium to long term outlook, you've got this impossible challenge of not crashing the economy with rate hikes, or as rates decline, gold becoming more attractive on a relative yield basis. So I think we're still fairly positive on precious metals, but I think there's going to be some near-term weakness in the price.
Sounds like it's time for us all to go to the beach, Ollie. Very good. We'll speak again tomorrow.
Are you doing tomorrow, or are you off ahead of your birthday?
Oh, you just sneaked that one in, didn't you? Come on, we're well past our 5 minutes. We don't need to discuss how bloody old I am. I will do tomorrow morning. I am playing golf in the afternoon with Premier Mighton. But we'll speak tomorrow. Thanks.
Cheers.